Howard, welcome back. Thank you so much. This is Howard Chan from Curve Invest. He's the CEO. Um, you guys have been getting a lot of talk on all the social media platforms, Reddit, X, YouTube, you and Roundhill funds, primarily because you guys protect the NAV and the distributions are fantastic. And then at the end of 2024, you guys paid out a huge dividends. And I got a couple questions here I wanted to get into. How are you guys protecting NAVs so well when everyone else seems to be having to reverse split?
Yeah, I think, this is something that we talked about when we first launched the fund, and it took a while to, I guess, prove our point, I guess, is we really only distribute what the market gives us. So in terms of the cover calls, the premiums that we get, we generally distribute only the premium. Sometimes we hold it back if it's a month that we got more premium than we expected, to sort of as a rainy day fund for a month in which we get less premium from the market. There are moments where vol has gone down and we are able to harvest less. But really, it's about being very cognizant of the amount that we distribute. We don't want to over distribute. Now, when the market gives us more, both in terms of gains, we're going to distribute that out to our investors. So you can see that in November and December, and for some, going into the new year. I hope people don't mind when we distribute a little bit more, but that's only in the service that we got more than what we got more from the market. But we don't, from the very start, we don't promise a particular yield because we know that in times when the market gives us less and we promise that yield, we're going to have to eat into NAV, and we don't want to do that. So we can never really compete on a very, very high yield number. What we focus on is total return. Ultimately, that's the number that really matters for portfolio, which is the amount of dollars that you keep in your pocket. So that's really, just kind of diligent um, weekly, monthly monitoring of, how much we distribute and what the market can produce for us and ultimately for the investor.
So, for instance, Netflix last week, you guys just absolutely crushed it. You were like almost I don't know, zero point 0.8. You didn't quite match what Netflix produced, but you also captured almost all of the upside when your competition did not. And you're going to pay out a distribution. Now, intentionally did you guys not distribute all of the premiums collected? And you're going to, are you putting that in a slush fund?
No, well, we always have a bit that we hold back in case, a month that we don't get as much premium. But for Netflix, we actually intentionally wrote our calls a little bit out of the money because we knew that it was earning seasons. And for us, uh, from the very beginning, we say we want to balance between price appreciation and income generation. So, in the case in which Netflix had really good earnings and the stocks popped, we want to be able to ride a lot of that price appreciation. And it turned out that that happened. And so, and if earnings was terrible, we could have reset our call and wrote another call and get more premium. So, we want to be able to be a little bit adaptive between what the market is doing, and especially sensitive during earning seasons because the stock price or the price of these equities could move quite a bit.
That's awesome. I'm really looking forward to Amazon, with the Christmas run. So hopefully we'll see some big numbers come out of that one. Question for you: can we get a Mag 7 fund? I know you guys get asked this all the time, but people are asking.
Yeah, I guess that would be our K triple Q ETF. We really, for the existing yield premium ETFs that we have are really for dedicated income investors. But we've gotten also feedback from folks who one of the I guess thing you have to accept when you have cover call ETFs is that you do limit some of the upside for income. And so we wanted to be able to have a strategy where you can actually a bit of best of both worlds. Magnify the upside when the risk is on in the market, and then when the risk is off, we can write cover calls to generate income and also mitigate the downside. And so that came out to be K triple Q.
And are you guys still writing? Was it 15% out of the money?
Yeah, so in K triple Q, we're a little bit more dynamic. We generally have calls on many of the names, and we actually vary the strike. So for the names that have uh, momentum, we may have a call on, but the strike would be very, very far off. So we can again ride the price appreciation. And for those who don't have price momentum, we will write the strike closer to get more um, premium. The other thing we do, which we don't do in yield premium, is that we change the amount of calls that we write. So if the stock has a lot of momentum, we may write only 50% of if there's $100 in that name, we might only write $50 worth of the call. But when it doesn't have momentum, we then will dial it up to 100. So that's why it's what we call dynamic income, because we want to be able to, at the end of the day, one of the reasons why you want to have Mag 7 is that the stocks are doing fantastic, right? So you want to have some of that price appreciation or a lot of the price appreciation. And we know it's important for income investors to have that income. So we want to have both. Why not have both when you can try to achieve that goal? So
Um, that's great. So it's kind of you have the ability to move, which is important.
yeah.
Um, this was a question from one of our viewers in the last show we did. Is Neo still involved at all in the trading?
No. As of November of last year, we've transitioned that Curve is managing all of our portfolios. And um, so, I think we hopefully you haven't seen a deterioration of portfolio management skills. In fact, I think right now many of the funds are even more dynamic to try to get a good amount of income plus price appreciation across all of the ETFs.
It's been great. Everyone really is loving it, and I want to congratulate you on your success. This got brought up yesterday on our meeting, which anyone watching this, I hope you guys join the monthly meeting call with Curve, and a lot of these questions will be answered. But I do want to bring it up for anyone who wasn't on the meeting yesterday. Um, I know we are kind of hesitant about the getting an ETF that pays weekly, but can we at least break up the single stock ETF so that they pay like I don't know, Netflix pays on one Friday, Tesla pays on another Friday, Amazon another Friday. That way it breaks it up and people can get paid on a weekly basis, but not, it doesn't kill you guys.
Yes. So all of the feedback has been extraordinarily helpful. I would just say we've heard your feedback about when we announce dividends and then this weekly pair. So we're working on something, hopefully that will meet what people are expecting. And then we will announce it clearly. So if anything, we will try to be as clear in our communications going forward. But one of the things I mentioned is if you have a single fund that was distributing monthly and then now you're distributing weekly, it deteriorates some of the income generation because you have less time to compound your capital, right? So during the call, it was suggested, well, maybe we shift the schedule for the six. So, and that doesn't deteriorate our ability to generate income. So that's something we definitely consider. Ultimately, what we want to do is be able to generate, meet the investment objective. Don't do anything that's going to deter us from reaching that goal. So that was a suggestion. That was great. That we're trying to figure out how to spread things around. So wait until we have finalized the plan, and then we will communicate clearly. And please stay on channels like this or our X or on a subscription list. We will make sure to, before we make the change, to make the announcement very clear so that people know what to expect on the distribution schedule. And when we announce. So we definitely, your feedback is being heard. So if you have more feedback, provide them so we can adjust them or evaluate whether we can adjust them. and then we'll try to meet people's expectations.
That's great. I appreciate it. This question comes from Comic Book Billionaire is their username. Does Curve have anything in the works for MicroStrategy?
We don't, unfortunately. I think that there's quite a few ETFs on that on those exposures. When we launch a new ETFs, we want to think about how can we differentiate ourselves. There's, for instance, 13 Bitcoin ETFs. I don't think we need a 14th. We in the yield premium suite, we're able to differentiate ourselves because we want to have a balance between price appreciation and income. And KQQQ is definitely a very unique strategy. So we want to put things out that will, you know, that we know we have the ability to outperform. And so currently we don't have plans for a MicroStrategies ETF.
Okay. Lightning. Oop, I don't know. Oh, there you are. You had froze for a second on your end,
Oh,
but you're back now. Uh, Lightning Capital asks, what distinguishes? So this one's. I don't know if you even want to touch on this. What distinguishes Curve from Yield Max as far as capital appreciation? Basically, like how are you guys able to, grab that upward mobility? Is it because of the 15% out of the money?
yeah, we generally do, right? Our calls a little bit further out because we know that these stocks can appreciate quite quickly over a short period of time. So if we allow essentially room to breathe, that let the stock appreciate while generating some healthy income from the call, I think that for us is a pretty good outcome. That's shown in that thesis have proven out in 2024, where five of our six ETFs better total return and some by a pretty large margin. So we think that's a pretty strong investment thesis that will, keep going forward.
That's good. You're you guys are running now when you capture some of those extra dividends, that premium, it goes into some like a form of a float, right? Are you buying up treasury yields to try to capture some more upside?
It's an imaginary bank in the fund. Basically, we keep some of the capital. We call it internally a bank because we keep track of the premium that we harvest, and we make sure that we don't over distribute, basically. So when we have extra premium that we want to hold back, those generally are invested in interest-bearing securities like a T-bill or a money market fund that yields about it was 5%. Now it's like 4.5, 4.25. Yeah.
Okay. And this is my last question. Lastly, how did Curve classify dividends for tax year 2024? And it's because I don't think people really consider how important it is when they're buying these covered call ETFs and their money's either a return of capital or if it's, taxes ordinary income. How did Curve classify that income generated?
That will be dependent on which fund it is. Some funds do have return of capital. There are, I will say, in 2024, we try to manage this as best as we can, but after the election or even before the election, actually, the earnings call for Tesla before the election and after the election, um, Tesla just appreciated a tremendous amount. Well, we got a good part of that, but for that amount of appreciation is really hard to manage the quality of the gains, especially since we have to roll the options. So you will see a little bit more of short-term capital gains in those funds that appreciated a lot at the end of the year. We try to make sure the quality of the distribution is as best as possible. So that's why there's still some funds that have return of capital, which is, again, they're cap gains that are not immediately taxable distributions. In 2025, this year, we are working on a couple of things that will even improve the quality of these distributions. So stay tuned. We hope that people will be, we're always, even though these strategies now is more than a year old out in the market, there are always places where we can improve. And so we're going to, one of the key things is we're going to improve on the quality, the tax quality of the distribution for these six funds.
Oh, and you know what? Uh, I asked a question yesterday that it was kind of answered, but it I don't think it was I think we can do a little bit better. I had asked a question on the chat about AI, but I was
Mhm.
specifically I wasn't talking about like Google AI or XAI or Facebook AI. I was speaking about the what do you call it? The RGTIs, the qubits, the
Uh,
the other AI funds that have just been taking off. They basically went from like penny stocks to everyone's talking about them in the quantum space. Does Curve have any interest in a quantum type ETF?
uh, We haven't, I mean, having these conversations sort of also is idea generation for us. If there is interest, we haven't have any plans. We do have plans for some other ETFs, but not in this sector. But we'll take a look at it because um,
I don't think there's
it's
another one out there, which is
yeah,
why
I
I
don't think
asked.
there
You're the
is. So that's
original,
an
and that's
interesting question. Yeah, yeah. We'll take a look at it. That's interesting. Yeah, we'll take a look at it.
okay. Anything else you want to touch on? Anything else? Any good nuggets of truth you want to give us for 2025?
Yeah, I just wanted to say, for those who really gave us, trusted us and gave our ETFs a try, we really thank you for trusting us. I hopefully, when we first jumped on early 2024, late 2023, we were kind of talking about what we believe will work, and that's proven out in 2024. So I hope many people who stuck with us were happy with the returns that they got and the income that we generated. There are more interesting things to come in 2025. The other thing is we are in a lot of these communities looking at the communications. We know a lot of people are really passionate about investing, and Dom, which is our portfolio manager, and I wanted to pass on some of, you know, the things that we learned in the market. So we actually, as of this week, launched our first podcast. It's called Curve Your Enthusiasm. It's on all the platforms. So if you're interested about markets, the way the podcast works is it's supposed to be short. It's like 20 to 30 minutes. The first half is about the markets that's happening right now, and then the second half is actually we typically talk about a trade or explain a trade that is mentioned in the market. So if you are really interested in how things work, we actually go pretty in depth in there, and then yeah, hopefully you guys take a listen and let us know. Maybe it's a very short podcast career. Maybe we'll try to do it at least for the next year and see how people think about it. But definitely, that's something that we don't talk about products there. Is purely talking about markets. So take a listen and let us know what you think.
And they can find that on like Spotify. Is it
It's
updated
on Spot.
weekly or
It's we still have to manage the portfolio. So what we aim to do is to release every 2 weeks.
yeah?
Um, so the first episode is about Fed funds rate and how people predict Fed funds rates. We have the next few episodes planned, and so the next one we're going to talk about a Bitcoin arbitrage trade that it's been mentioned, and we want to just explain what that is. And then we have a few other things that's planned that should be pretty interesting. So take a listen. If it's not interesting, let us know so we can adjust. But we think it's interesting. Yeah.
That's awesome, Howard. Thank you so much for taking time out of your busy day. Um, unless there's anything else, I'll let you get back to it. The market's calling.
Okay, great. Thank you very much. Talk to you
Thanks,
later.
Howard. Take care. Bye.
Okay, bye.